Are you interested in achieving financial success? Have you ever wondered what sets the likes of Warren Buffett apart from the average investor? After decades of experience and success as one of the greatest investors, Warren Buffett has revealed his secret to success: a set of 6 rules of investing. These simple yet effective rules have served him well over the years, and if followed properly, can help improve your own investing success as well. Investing $1,000 in his company Berkshire Hathaway when he took it over would have earned you an astonishing return of over $21 million even with the recent market crash. Hey everyone, welcome to the Billion Stories. In this video, we'll explore Warren Buffett's 6 rules of investing that made him one of the richest men in the world today. If you're new here, don't miss out on all the amazing content we have to offer. Make sure to hit that subscribe button and turn on notifications so you can stay up to date on all of our latest videos. We guarantee it will be worth your while. So, without further ado, let's get started. Number 1. Cash is never a good investment. If you're considering investing your money in cash, think again. Warren Buffett's number 1 rule is to never invest in cash. Instead, put your money into assets. Warren Buffett's philosophy is to get out of cash and into assets because you don't know what will happen to currency values over time. Cash won't ever produce any returns, and it can lose value. You always want to make sure you have enough cash on hand to cover expenses, but there's no need to keep excessive amounts around. Instead, good businesses are always a better bet than cash. In the past year, Buffett was able to deploy over $40 billion in cash, and now he has less than $20 billion left with extra earnings coming in. He knows that the dollar will be worth less 10, 20, or 30 years from now compared to other currencies, so cash isn't a good place to store wealth. Investing for the future is much more secure when you put your money towards an asset rather than cash. Number 2. Invest in productive assets. Essentially, when Buffett talks about productive assets, he's referring to investments that create wealth and make money in the long run. This includes stocks, bonds, and other securities, or even businesses that turn profits. Investing in these sorts of productive assets allows you to see a greater return on your investment over time rather than simply owning non-productive items like gold, which, as Buffett puts it, may come with a sense of accomplishment and ownership, but is ultimately not doing anything for you financially. When it comes to investing, Warren Buffett's rule of thumb is to invest in productive assets. Think about what the asset can deliver over time. Farms produce corn, soybeans, cotton, or whatever crops you decide to focus on. Do the math. Factor in how much you pay the tenant farmer, taxes, and other expenses. The success of your investment will depend on whether it meets your expectations for productivity. When you're investing, don't be too concerned with moment-to-moment changes in the market. Instead, think in terms of the long game and what productive assets you can acquire or retain. Warren Buffett advises that you focus on a business or security's productive power, things like tangible products, intellectual property, and so on. Your goal should be to maximize the output you get from those assets, no matter how long it takes for the stock exchange to close. With this approach, you can make your investments truly pay off. Number 3. Stay in your circle of competence. Knowing where the boundaries of your circle of competence lie and staying inside them is key to successful investing, according to Warren Buffett. As an investor, it's important to stay in the circle of your competence. This doesn't mean you need to be a master of every topic. You just need to know where the boundaries of your knowledge lie and stick inside them. Think of it this way. If Tom Watson Sr., who started IBM, didn't consider himself a genius but knew to stay around his smart spots, what could that teach us? It means while it's tempting to get excited by stories or trends others are talking about, if we don't truly understand something outside our circle, we're likely to make costly mistakes. Stay in your lane and focus on what you know best. That's the key to successful investing. Number 4. Evaluate companies first. Investing in stocks can be intimidating at first, especially if you're a beginner. That's why it's important to understand Warren Buffett's rules of investing. Start by evaluating each company before committing any money. Don't get blinded by stock prices. You can't expect to make a winning stock pick just by waiting for prices to go higher. Instead, take the time to evaluate the company before you invest. Read annual reports and get familiar with the business, what it does, and how it makes money. Once you have an understanding of the company's worth, compare it to the current market price. If the price is below your estimated value, that's a good sign to buy. Buffett takes this approach every time he considers buying a stock, like when he stumbled upon PetroChina. He read their annual report, sized up the company and its worth, then looked at the stock price to see if it was a good deal. With this strategy, you can make better decisions when it comes to investing. Number 5. Play big and don't waste opportunities. You don't have an unlimited number of chances in life. You need to make sure that you choose the right opportunities to pursue and don't waste your time chasing after something that is not likely to pay off. When it comes to investing, you have to be smart and think big. Don't settle for any small chance or deal, look for the ones that are worth taking a risk on. Take advantage of the few great opportunities that come your way before they pass you by. Make sure each decision counts, because you don't get a second chance to make the same mistake. Trust your instinct and invest with confidence in what you believe will bring success. You can't anticipate the future in investing, but you can prepare for it. Warren Buffett has a few guidelines for investment success. Play big and don't waste opportunities. There's a temptation to dabble, particularly during bull markets, because it's so easy to click in an order and maybe get lucky with an uptick. But that kind of small-scale, short-term investing won't make much money over time. Think of it like this. You have a punch card with only 20 punches on it. That's all the investments you can make for the rest of your life. Suddenly, each decision takes on greater urgency. You must think carefully about every investment choice and make smart, substantial decisions. Don't concern yourself with using all 20 strikes. If you play big and don't waste opportunities, you'll be more likely to make more meaningful gains. Number 6. Invest in yourself. Invest in yourself, Warren Buffett's rules of investing. You possess $1 million asset, your talent. Even inflation and taxes can't diminish it. In the words of Warren Buffett, if you own your own talents, it's like having the best boat in the world. No one can ever take that from you. Not inflation, not taxes, no one. So when I talk to students, I remind them that their worth is $1 million asset. In fact, I'm willing to pay them $100,000 for 10% of their future earnings. All I'm asking for is for them to increase their value by 50% with improved communication skills. That's an extra $500,000 that nobody can ever take away. I urge everyone, high schoolers, college kids alike, to develop their habits of success and cultivate their brain power and energy. Don't let those gifts go to waste. Investing in yourself is like investing in $1 million asset. Think of it as having your own boat for life, one with unlimited potential that nobody can take away from you. With the right habits, skills, and attitude, you can increase your value exponentially and become the best version of yourself. Warren Buffett's rules of investing point to this idea. Learn to communicate better, develop qualities that make people admire you, be friendly and humorous, and give credit to those around you. These small changes will take you far and help shape you into a successful investor. Invest in yourself now. It's an opportunity worth taking. I hope you found this video useful and informative. Please give us a thumbs up and be sure to subscribe, because more incredible content is on the way. Thanks for watching.